Hey everyone, welcome back to Corporate Decoder. Today BLNE just filed an 8K and I am seeing a move that could signal a big shift. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company just acquired a stake in another firm and it looks like they are consolidating control. So Beeline Holdings Incorporated, you know them as BLN on the stock market, has filed a current report indicating a significant event. This filing is all about a business combination that happened on the 30th of June of 2026. Basically, Beeline Financial Holdings Incorporated, a subsidiary, entered into a securities exchange agreement with MagicBlocks Incorporated. What this means is Beeline is taking full control of MagicBlocks. Before this, Beeline owned about 47.6% of MagicBlocks, and now they own it all. This is a pretty big deal because it means Beeline is integrating MagicBlocks completely into its operations. To make this happen, Beeline acquired the shares from the sellers for a very small amount of cash. They also issued over 211,000 shares of Beeline's own stock to certain investors who held special agreements called Simple Agreements for Future Equity, or SAFEs. This exchange basically settled those SAFEs, which were worth around $476,000 in total. All of MagicBlocks' existing stock options were also cancelled as part of this deal. Now, here is an interesting detail. Nicholas R. Loser Jr., the CEO of Beeline Holdings, was actually one of these investors holding safes. He had $70,000 worth of these special agreements, and in this exchange, he received over 31,000 shares of Beeline stock. The price he got these shares at, $2.25. Per share was actually higher than the market price at the time, but it was on the same terms as everyone else who held these safes. This shows how management and the company are intertwined in these deals. On top of this acquisition, the filing also details some unregistered sales of equity securities. Between late May and late June of 2026, Beeline sold and issued over 1.3 million shares of its common stock. This was done under a previous agreement with CIM Capital Master Fund LP. They raised over $1.5 million in gross proceeds from this sale. This type of sale is usually done under an exemption from registration requirements, and the filing states they use Section 4, Art 2 of the Securities Act of 1933. So, in a little over a month, Beeline brought in about $1.5 million by selling more stock. This is separate from the MagicBlocks deal, but happened around the same time. This is a common way for companies to raise capital, especially if they are looking for quick funding. Now, the acquisition of MagicBlocks was also exempt from standard registration rules, falling under Section 4, Add 2, and Rule 506B of the Securities Act. D exhibits, finally, the filing lists the exhibits, which are the actual documents related to these events. The most important one here is Exhibit 10.1, which is the form of securities exchange agreement. This is the actual contract that details the MagicBlocks acquisition. This report is signed by Nicholas R. Loser Jr., the Chief Executive Officer, on the 2nd of July 2026, confirming the information presented is accurate to the best of his knowledge. Looking at the bigger picture and some recent headlines, this move makes sense. Beeline, which is in financial services and mortgage finance, has been consolidating its position. The acquisition of MagicBlocks, which expands Beeline's AI automation across mortgage and title operations, is a strategic play. Raising the $1.58 million through an equity line also shows they are actively seeking funding to support these growth initiatives. However, it is not all positive news. Just a couple of days after this filing, some reports highlighted that Beeline's stock prices dropped significantly, even below $1.1 at one point. This has led to insiders like the ones holding stock seeing losses. This suggests that while the company is making strategic moves, the market reaction hasn't been entirely favorable recently. At least in terms of stock price performance, it is worth noting the company's market cap is around $36 million with a very low P/E ratio of 0.6, indicating the market might be valuing it very cheaply relative to its earnings. So, what does this all mean? Beeline is clearly focused on growth through acquisition and expanding its technological capabilities with AI. They are buying out a subsidiary to gain full control and raising capital to fuel their future. This is a common strategy for companies looking to scale rapidly. However, the recent stock price weakness and insider losses suggest there are market concerns or perhaps a disconnect between the company's strategic actions and investor sentiment. The key risk here is whether these acquisitions and capital raises will translate into meaningful revenue and profit growth that the market will eventually reward, or if the company will continue to face headwinds. My biggest concern is the sustainability of these growth strategies in the face of a potentially struggling stock valuation. What I am actually looking for is to see if this consolidation leads to better financial performance and a stronger market position in the coming quarters. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this breakdown helpful, please like this video, subscribe for more, and join our Discord community linked in the description.